Hey everyone, today we're diving into a really fascinating story that connects a prime minister's trip to Europe with a massive stock market surge for a shrimp company all the way in Andhra Pradesh. It's just a perfect example of how big global politics can have a huge, immediate impact right on a local company's balance sheet.
So let me ask you a question. How does a diplomatic handshake, a photo op in Brussels, thousands and thousands of miles away,
How does that suddenly have a massive, and I mean massive, impact on a company that basically just freezes and exports shrimp? I mean, on the surface, these two things seem totally unrelated, right?
well, they're not. That handshake directly led to the stock of a company called Apex Frozen Foods jumping an incredible 19% in just a single day. So how on earth did that happen? What did the market see that made it explode like that? Well, the answer is all in that handshake. It wasn't just a simple greeting, it was the symbolic signing of a long awaited free trade agreement between India and the European Union, an agreement that was personally pushed by Prime Minister Modi. This was way more than a photo op, it was a huge financial catalyst. And you know what? Investors didn't waste a single second. The market reacted almost instantly because the financial benefit here wasn't buried in some complex legal jargon. Nope, it was all about one simple, very powerful number. And that brings us right to the heart of the story, how this agreement literally turned a massive tax into pure, cold, hard profit for the company. And that number is 26%. For years, the European Union has been charging this huge 26% import tax on shrimp coming from India. For a company like Apex, that is a massive chunk of their money just gone before they even see it. So let's break this down with some really simple math. Before this deal, if Apex shipped 100 rupees worth of shrimp, the EU would just take 26 rupees right off the top. Gone. Apex only got 74. But after this deal goes into effect, that tax becomes zero. The company keeps the full 100 rupees. And that's why the analysis of this calls it pure profit addition. See, this isn't just more revenue that comes with more costs to make it. No, this is an extra 26 rupees on every 100 that goes straight to the bottom line. And that is exactly the kind of thing that gets investors incredibly excited. But wait, it gets even better. So this EU deal, it wasn't just happening on its own. It was actually the second piece of fantastic news for Apex in a really short amount of time, creating what you could call a perfect storm of positive momentum. And really, this is the best way to think about it. For a company like Apex, their two biggest enemies are high taxes and high tariffs in their main markets. And then, in the same year, both of those enemies basically became friends. Check out this double victory. So while Europe was getting ready to eliminate its 26% tax, America was busy slashing its own tariffs on Indian shrimp from a staggering 50% all the way down to 18%. So you've got two of the company's biggest markets becoming way more profitable almost at the same time. That is so rare. Okay, but here is the big catch. While the market was celebrating like the money was already in the bank, the actual cash from this European deal, well, it won't start flowing for a few more years. And, I mean, this deal has been a marathon. The negotiations started way back in 2007. They stalled, they got restarted. It was finally announced on January 27th, 2026. But the key date you need to watch is 2027. That's when the zero tax benefit actually kicks in after all the governments give it the final stamp of approval. You know, the source material uses a perfect metaphor for this situation. It's like a blockbuster movie has been announced, the trailer is out, everyone is super hyped, but we all still have to wait for the actual release date. And this gap between the big announcement and when it actually happens, it means we can expect a lot of price swings. So what's the bottom line here? Well, the long-term future for a company like this looks really positive. But in the short term, between now and 2027, you can bet that the stock price is going to react to every single piece of news about the deal's approval process. It's just a crystal clear example of why it's so important to watch the news, because political headlines can directly move markets. And remember, as always, this isn't any kind of financial advice. We're just here to connect the dots. A handshake in Brussels, a tax rate in Europe, a tariff reduction in America, and a 19-year negotiation. It all came together to send one shrimp stock soaring. It's just a powerful reminder that sometimes the biggest financial stories are found in the connections.